Good afternoon, and thank you for joining us today. I'm Taylor Combaluzier, a mining analyst at Red Cloud Securities, Inc. Today's webinar features Grid Metals Corp, which is focused on exploring and developing its assets in Manitoba and Ontario. It has a diverse portfolio of base metal and lithium projects. Notably, Grid recently entered into an agreement with the Tanco Mining Corporation of Canada, or Tanco, to conduct metallurgical and bulk testing with the goal of eventually signing a binding agreement to split the costs and profits of mining, processing, and selling lithium spodumene concentrate. Additionally, an updated resource and PEA are anticipated for its Ni-Cu-PGM-Co nickel-copper PGM and cobalt project in Ontario, Manitoba. Today I have with me on the webinar Robin Dunbar, who's the president and CEO at Grid Metals. The format of today's webinar will be comprised of two parts. In the first part, Robin will provide an update on Grid and go into this week's announcement to collaborate with Tanco, as well as update investors on its plans for the coming year. And then in the second part, we'll take your questions live. So please send us your questions using the chat, and we'll get to as many as we can. And I'll note that you can type them in at any point throughout the presentation. To start, we'll cover the disclosures and then get into the presentation. So for Grid Metals, there may be some forward-looking statements made on this call. I direct listeners to the cautionary note on page 2 of the corporate presentation located on the company's website. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. And we note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Grid Metals specific disclosures. So with that out of the way, I'll turn it over to Robin to update you on the company and what you have to look forward to.
Thanks very much, Taylor. Happy to be here today to present about Grid Metals and our activities. And I just would start by providing a disclaimer of our own that we will be making some forward-looking statements today in this presentation, and that they're not to be relied on in terms of making your investment decisions. And please consult your investment advisor for any investment activities. For those of you who are not familiar with Grid Metals, we are a company that has assets both in base metals, primarily nickel is the main base metal, and also lithium. And our assets are in Ontario and Manitoba. And we are focused primarily in Manitoba currently, where our assets are in southeast Manitoba, about 150 kilometers from Winnipeg. Our key assets we're working on include a PEA stage nickel copper PGM asset and our Donner Lake lithium project as well. And what's kind of unique is that these are both in the Bird River Greenstone Belt area. So they're very close together geographically, and that is provides some synergies in terms of our activities. All our geological staff is based locally, and our travel times to the property, I mean, literally they're next to each other. So that provides some synergies. Our Manitoba nickel copper PGM project has about $4 billion in defined metal in 2 open pit resources. These are pit optimized resources, and we have some exploration upside there. The Donner Lake lithium property, we just completed a drill program earlier this year, and we've outlined 2 continuous high-grade LCT dikes, and we are planning on commencing drilling in the next couple of weeks on both the nickel and the lithium assets. We announced an interesting deal recently with the Tanco mine, which I'll mention in a few slides. And this, I think, gives us an opportunity to get some early term cash flow from our lithium project, as we are located next to Tanco mine, which is really Canada's only currently producing lithium operation. Our working capital position has been shored up. It's about $14 million. We have completed a recent financing with strategic investors, primarily out of West Australia, and all that stock from the placement is a 1-year hold. The management team consists of myself. I've been in the business for well over 20 years now. currently director of McEwen Mining, and I was the director of Australian-based Western Areas, which is recently acquired by Independence Group. And Independence Group is a shareholder of ours now. They're one of the largest intermediate lithium and nickel companies on the ASX. Dave Peck joined us a couple of years ago. He's a leading PGM and nickel geologist, and he came to us from North American Palladium, where he was in charge of all the technical aspects and exploration, and he worked for Anglo American in their global exploration for nickel. And so I always say there's not too many projects around the world that Dave hasn't worked on, and he has a PhD in geology from Melbourne University. Dave's based in Winnipeg, which is about an hour and a half from our property, so he's local to the project as well. Very importantly, Kerry Galischuk is our VP Exploration Lithium, and Kerry is one of the few geologists that has a long career in lithium in Canada. He worked for the Tanco mine for a number of years before joining us, and he's written a number of papers on lithium exploration. And we have a very kind of deep bench of consultants, and Ian Ward's heading up our project development. And Ian used to be the head of Micon International, a major consulting firm out of Toronto. We have a chart here on our cap structure. The stock's currently trading around 18 cents. We have fully diluted about 207 million, and our market cap is a little bit, this is a few days old here, but a little closer to 30 million now. So, we've done well on share price in the last few months when the market has really been tough. So, just to go in a bit about our recent financing, I think this is important because it's a real vote of confidence, I think, in what we're doing. We sold 56 million shares in a placement, and the three largest placees were AMCI. And AMCI is a privately held private equity group out of the States. They are an international mine owner, operator, marketer, strategic equity investor. They have multiple offices around the world. They have interests in iron ore and copper, and they also have a strategic shareholding in a company called Green Technology Metals, which is a ASX listed lithium company. So AMCI is very experienced in terms of investing in and developing mines. As you can see, the group revenue is about $3 billion a year, so a large company. They co-invested with a group out of West Australia called Churchill, which is a group of strategic investors, which also includes Primero. Primero Engineering is a wholly owned subsidiary of a large engineering company in WA. And Primero's expertise is in process engineering and particularly lithium now. They've opened up an office in Canada. So they've designed and operate lithium processing facilities and also in nickel as well. And then Lithium Royalty Corp, who we did a financing with in January of this year, they also ponied up some more money. So now they're actually our largest shareholder. So these three groups were the core of the financing. And then there's a group of private individuals, high net worth individuals, very experienced mining people who were also came in on the financing. Interesting to note the shares in this financing are a 1 year hold. So that's about a third of our float is can't be traded until about 11 months from now. One of the things we're looking at is potentially listing on the ASX, where there's better liquidity and a lot of interest in lithium companies, more so than the Canadian market. So that's something that we're looking at. And this group, they liked our assets. They like what we're doing. They like Manitoba as a hub. They got behind a new listing, Green Technology Metals, last year, and in about a year they bought an asset. They listed the company. The market cap went to about $200 million. They're working in Northern Ontario, north of Thunder Bay, and done a great job, raised $50 million. And really, it's the same investor group that was behind GT1 that's now come in to invest in Grid. And really, the synergy there was that they looked at our assets and Manitoba and like what they saw. So we think it's a great vote of confidence. We think they'll be able to add value technically and in the market and the relationships. And so we think this is this shareholding is in the long-term interests of the company. And the other thing is that we're a little bit concerned about the way the market's going these days, and we really feel there's a strong case to move our projects forward, and we can use the money. So we don't like the dilution, but we think net this is going to be very, very positive for Grid Metals. Just to give you a location on the map of where our projects are, you can see that there's a provincial capital, Winnipeg in Manitoba, and there's the location of the Makwa Mayville project and Donner Lake. The properties are about, by road, about 150 kilometers from Winnipeg. It's a mining area. We've done a lot of work in the last couple of years to secure an agreement with the local First Nation that takes us all the way through the exploration stage. The Manitoba government has really upped their game now in terms of granting drill permits, particularly with those companies that have agreements with First Nations in place. And Manitoba has a strong history as a mining jurisdiction. In terms of the battery metal sector, Manitoba's already producing. So they produce nickel from the Thompson belt, and in northern Manitoba, about 500 kilometers north, they ship the nickel concentrate through Winnipeg. And then there's also spodumene concentrate being produced at the Tanco mine, which is right next to our property. And that spodumene concentrate currently gets shipped over to China for processing. Manitoba is a really good place for ESG credentials. About 97% of the power in Manitoba is hydroelectrically generated from the Winnipeg River, right very close to where our project is. We think Manitoba is a really good jurisdiction to be located in. The Bird River properties, there's a property map here on our left. I'll just, again, you can see that, you drive out from Winnipeg by road. On the Bird River Greenstone Belt has a north limb and a south limb. The south limb is where the Tanco mine is. You can see that Tanco mine here, and then our Makwa nickel deposit is to the south, and we have about 10 kilometers of the belt tied up there. And in the blue rocks is really the prospective mafic, ultramafic rocks. And on the north arm of the Bird River Sill, we have our Mayville copper deposit, and which is another copper nickel deposit, and then the Donner Lake lithium property, which is just to the south. Just as a background, we've been active in this area since 2005. We were trying to put the Makwa deposit into production in 2007. While the nickel price was strong, the nickel price collapsed, and we did more exploration, drilling off the Mayville copper deposit, and so we've kept these assets for the cycle, and the cycle is really here for what we're doing now. Nickel and lithium are key metals for the batteries. Our Donner Lake property is a 75-25 joint venture with Lithium Royalty Corp, and who are funding their share of the activities. And there's a picture here of a truck loaded up with spodumene concentrate, leaving the Tanco mine to be trucked to Vancouver to be sent over to China. So I'll just run quickly through our. Actually, just a comment about EV battery demand. So one really key factor that's changed is obviously there's a big push on for electrification. EV metals for electric vehicles. Lithium, there's a chart here, lithium prices are particularly strong. The Inflation Reduction Act that was passed in August in 2022 by the current U.S. administration, that enables EV incentives to be provided by the automakers for vehicles with a certain amount of North American sourced battery raw materials. So in the next few years, what will happen is if an automaker wants to get a subsidy for the government to subsidize the cost of an EV, a certain amount of that subsidy per vehicle will be based on whether or not the critical metals, the raw materials that go into the battery are sourced in North America. So what this is going to do, it's going to bring much more of an impetus for the battery makers, the automakers to find their batteries that have critical metals that are produced in North America. And you know, there is a real push on now with the strategic and the battery makers and the automakers to make sure that they're setting up their supply chain. So this is perfect for grid, because this also applies to allies of the U.S. that are you know, considered friendly. So Canada is certainly in that category. So for both our lithium and nickel, we think that we're going to see more interest in what we're doing to feed into this North American supply chain. And just to give you an example, GM sold less than 100,000 electric vehicles in North America last year. And by 2026, their publicly stated target is to sell a million EVs in North America. So we think this trend is going to accelerate, and it's here to stay. So it's a great tailwind for us. You can't have it doesn't matter what the legislation is, you got to have viable projects. You know, we have been working on the Ni-Cu-PGM-Co project now for a number of years. This has a really nice suite of metals: nickel, copper, PGM, cobalt. Again, the property at Ni-Cu-PGM-Co, we have two deposits. We have the Mayville deposit to the north, the Ni-Cu to the south. The idea is to put in a concentrator to the north in the Mayville, truck the ore from, which is higher value, from the Ni-Cu deposit up and around over to the Mayville, process it there, produce separate copper and nickel concentrates, and those would be sold to smelter. We did a PEA in 2014, and we're now updating that. And the you know, we have some better information now on metallurgy and various other factors, which we will incorporate into the updated PEA, which will provide a bit of a framework for us to give us a real snapshot of the current value of the project. At the same time, we commenced this year all the baseline environmental work at both areas, which is going to be required for permitting. We think this project will be eligible to be permitted provincially, which will be quicker than the federal process. And we're just about to announce the results of drilling that we did earlier this year at the Ni-Cu deposit for nickel, and then we're going to start another phase of exploration drilling later this month. So we think that this project there's more exploration upside. That's very important to add more metal to the model, and we think we have a pretty good game plan to do that. At the same time, we've de-risked this project. We've drilled over 100 holes. We've done a lot of metallurgy, and we think we're pretty close, if not there, to having a really viable project in a very good location. The resource is, as stated here, the Ni-Cu is more nickel dominant. Oops, I'm going to get rid of that. The Ni-Cu is about 7 million tons of 0.6 nickel, a very strong palladium credit. Actually, we think this is understated. And we've done some more drilling since to update these numbers. We're going to do a new resource as a precursor to our PEA. Mayville, we're going to do some more exploration in that. Mayville has low nickel, but it's copper and a bit of PGMs and also cobalt. We're going to incorporate cobalt into this next resource. The metallurgy for both deposits is good. Mayville, even though the nickel's low, we think we're going to see north of 60% recoveries. That's what our latest met work told us, and to about 11% concentrate. So we're pretty certain we can produce saleable metal concentrates, which is a huge factor in these base metal projects. You need to be able to produce a concentrate you can sell to a smelter, and the smelters are pretty particular about the type of product they take. So we think we've de-risked this. We want to add more tons, but there's about $4 billion of metal, and these numbers here are only the metal that can be taken out in open pits. So you know, pretty much all of this metal will be able to be mined. These are where we put the recent holes in our recent drilling. This is the Ni-Cu pit. There was a little bit of mining done there in 1972, which stopped when nickel prices were $2.50 a pound versus close to 10 now. This is the proposed pit outline from the 2008 PEA, or sorry, 2007 pre-feasibility and 2014 PEA. And then we think this deposit has more upside to depth. And this is a plan view here of where we put the holes at the deposit. So we look forward to reporting those holes pretty soon. And we're going to drill some more holes, primarily down dip at Macwa and some other targets. Mayville, that's the Mayville deposit is here. It's 26 million tons in the indicated category. We have a pretty interesting target here, this PGM zone right at surface, some high-grade material. That's going to be one of the targets, and we have a couple up at Mayville. And again, it's just really focused on adding more tons. And this Mayville we'll get to in the drill program early in 2023, because we can drill here better when it's freeze up. Excuse me. And actually, one point on both these deposits, really Mayville, there's no royalty. Macwa, there's a minimal royalty. That's another way of potentially financing some of the costs of this project going forward. Just a quick note, we think a really interesting project up in northern Manitoba around the Thompson belt. We took out 3 mineral exploration licenses, or MELs, excuse me. Big, large tracts of land, which under the legislation in Manitoba, you can hold for about 4 years at a fairly nominal cost. This Fox River belt that we've shown here, we got a 90-kilometer stretch. All kinds of data that's been done, some drilling, geochem, geophysics, ground geophysics. Dave really feels very strong. This is a real strong analogy to the Raglan deposit. We have 2 other MELs that are close to here that we've just flown, actually. So we're waiting for the results of a airborne geotech EM survey. So we'll see if we come up with some targets there. And that's something we might have a crack at later this year in terms of a more, early stage nickel deposits. But we think there's pretty strong interest from the majors as in nickel as a forward-facing commodity. And not too many terrains globally that you have a good chance of finding a kind of a world-class deposit. And for those of you who don't know Raglan, which is really like the Raglan model, Raglan's producing for many years. I think it produced 35,000 tons of nickel in concentrate. So that's a really world-class deposit and belt that's been producing for several decades now, located in northern Quebec. Now to flip over to our lithium assets, talk about the Donner Lake lithium property. And this is a 75% grid, 25% LRC. This is the property to the south here of the Mayville deposit. There were some historical pegmatites. We acquired these properties from Tanco in 2016. There's 2 dikes in there that there was a historical resource. We think that, the drilling has shown that's fairly close to what we might have there to start. The known pegmatites in the area are spodumene-bearing LCT types. They're good grade. They're very consistent. They're not overly wide, but they're from we've seen the maximum width of about 10 to 12 meters. They'll be from 2 to 5 meters wide on average, but they're very, very consistent, sheet-like. Just hasn't been enough exploration in this area at all. Like there was a burst of exploration in the 1950s, and then there was some exploration done by Tanco, which is Tantalum Mining Corporation of Canada. They were obviously looking for tantalum. They were not really interested in lithium, but they did identify a number of other pegmatites in the area. And this contact here between these 2 volcanics to the north, granites to the south, that's really our prime hunting ground with these structures that seem to host potential for pegmatites to occupy as our main exploration target. We've had a crew out there, a number of crews actually, since spring breakup, who've taken a really large number of samples, rock samples, and mapped the existing pegmatites and some of the new pegmatites. And all that work is the results are just starting to come in, but that'll help us vector towards buried pegmatites, and we'll get the lithium results on some of the known pegmatites. So we think this is a really interesting area. There's other active lithium explorers, including Mineral Resources out of Australia. Now they're like a multi-billion-dollar firm. They're working with New Age Metals to the east of us. It's safe to say they could have gone anywhere in the world to look for a new exploration area. They're the 5th largest lithium producer in the world, and so we think that's a good endorsement to this area. We just announced recently a pre-production MOU with Tanco, and really again, Tanco's had this mine in at Burnick Lake next to our nickel property since 1968. It's been operating, and they've been mining the world-class Tanco pegmatite, which is one of the most evolved pegmatites in the world. They've mined lithium from it. They've mined tantalum and also cesium. They recently switched the plant, this picture of the plant here, over to produce lithium concentrate, which they're sending to China. This mine is now owned by a company called Sinomine, which is based on the Shenzhen Stock Exchange, about a $7 billion market cap company. So the deal with it that we signed with them and is that we would initially start off with testing ore from the pegmatites that we've been drilling at the Tanco mill. Then we would work towards a bulk sampling of material from our pegmatites at their mill. And then, provided those steps go well and we have a permit, we could enter into a toll milling agreement with Tanco. So that's a really important potential source of optionality for us on this project. And I think the basis for this is that Tanco is looking to expand the resource base for their ongoing production. They have announced plans to increase the capacity at this operation, and I think it's fair to say they want to get their hands on as much source of supply of lithium feed as they can. And for us, we think there's a real potential for near-term revenue to take advantage of the currently high lithium prices, and we think that there's a potential to get this project into production while lithium prices are at high levels. And to give you a sense of the, lithium prices for spodumene concentrate have recently topped, $7,000, which means that this ore, roughly speaking, that in our pegmatites is worth about $1,000 a ton. So it's extremely high grade value of ore, and we think this is going to taper, but maybe not as fast as people think, because a lot of the projects that are around the world are in development will take longer than people think. So we think this is a great opportunity for us. The next step for us is ship some ore off to Tanco, and then get an advanced exploration permit. So the advanced exploration permit will enable us to take a bulk sample. We expect to have our permit submitted to the government first quarter of next year to try to get an advanced exploration permit, and that would enable us to put in the infrastructure to complete the bulk sampling. And then from there, we proceed to try to get a mining permit for toll milling. So we think this agreement really is kind of unique. The reality of lithium projects in Canada is that you got to have a place to process your ore. So for most projects, that means building your concentrator. And then the next step is you need to have a place to send your lithium concentrate. And that supply chain is not built out in Canada. And that's why you see companies talking about, building hydroxide plants, which is the next stage of processing. And so this process is going to take some time in Canada. And so this type of a pre-production MOU is unique for GRID, and we think it's a real opportunity for us. There's really two pegmatites that we focused on. Let's do this again. We've got the Northwest Dike, which we drilled last winter. We had drilled some holes in the main dike earlier this year, in 2018, and this is where we're going to plan to go back on these two dikes, try to do enough drilling to establish an initial resource. And both these dikes have good strike length and are very consistent. And there's another a number of dikes that we've mapped in this immediate area and elsewhere on the property that we'll be looking at going forward as well. And we're waiting for the sample results from our field program on these. This is the area, about 600 meters we drilled on the Northwest Dike this year. That's the dike up here. Sorry. So this is this area here. And you can see that we had the widths from 2 meters to 10 meters, very consistent along strike, and the grade is between 1 and sometimes close to 2%. So good grades. This is a picture of some of the core from a drill hole in the Northwest Dike. As I mentioned, we've done a pretty extensive field program. We've got baseline environmental and permitting underway. We're starting the advanced exploration permit, and starting again the resource and exploration drilling later this year. So it's full steam ahead on this project. We're well financed to continue our work here. Just a note about Winnipeg. I think Manitoba, Winnipeg. We think Canada, there's a lot of projects in Quebec, and we think that the spodumene production will eventually make its way through the port of Montreal. Obviously, a lot of activity going on in the Thunder Bay area, and from the projects north of there, that'll make its way through Thunder Bay. So we think the third hub is going to be Winnipeg, and you can see Winnipeg. It's not on the water, but it's historically been a east-west supply route in Canada with access to road and rail into the U.S., where many of the new planned battery plants are going to be. So we think Winnipeg is going to develop as a third hub. It's as a province, it's open for development, and we think that again this is a great location and jurisdiction for our projects. And Manitoba has publicly announced they're looking to attract investment for further upgrading of lithium products. So it's a very exciting time for Grid Metals. Focused on nickel and lithium, and really assets that are very well positioned, right in the sweet spot of the battery metals, mining kind of phenomenon that's happening right now. We've attracted some smart money to the company to enable acceleration of what we're doing. We see very, very strong fundamentals in the years ahead, with supportive legislation and more recognition of the requirements that government get involved. Some of the milestones will be more exploration, a maiden lithium resource next year, and ongoing exploration upside. And we think the Tanco agreement is a very unique agreement and really unlocks potential for near-term mine revenue, which we think is a really important option for the company. And going forward, we think there's a real high potential for both our projects in terms of the exploration activity. So lots of activity for Grid. We think it's going to be very interesting going ahead, and we look forward to keeping the market updated on our activities. And that's it for me. Thank you very much.
Great. Thanks a lot, Robin. So right now we'll turn over to the Q&A portion of the webinar, and just a reminder to everybody on the line, you can type in your questions at any point. Having said that, we have a couple that have come in already. First, just in regards to your comment on looking at potentially listing on the ASX, have you put any thought towards listing on a US exchange?
That's something that's just kind of come onto the radar screen. So I think, we'll do one or the other and one at a time, certainly. And I think, NASDAQ would be something that we would consider as an exchange that would get us more attention.
Okay, perfect. Okay, another question came in. Wondering, could you mention a timeline for the potential toll milling of Grid ore, and what potential tonnage would you be looking at?
Sure. I think the minimum tonnage we would be looking at is 1 to 200,000 tons, per year, which depending on the price would, could still yield significant cash flow. Kind of the high end we've talked about is 500,000 tons with Tanco, and that would require them to increase their mill size, which is something they're investigating. So that's the kind of the range in tonnage. The time frame, we would hope that by mid next year we would have our advanced exploration permit, and that would enable a bulk sample. From there, we would try to convert the AEP into a mining AEP. They're called, EAL, an Environment Act license, which is really your permit to mine in Manitoba. And it's hard to say what the time frame, but let me throw it. A year might be possible in terms of, from there. So it could be less than 2 years to be able to get into operation on a fairly limited scale but meaningful, and depending on the spodumene price, of course. And I think that I would say that your average project like ours in Canada would be 5 to 7 for typical permitting of a mill and construction. So it's we think that our timeline could be considerably faster.
Right, exactly. Okay.
That's a forward-looking statement, by the way, because we actually don't know. But yeah.
No worries. Okay, another question here. Just wondering what the game plan is at Bird River.
Yeah, we have a PEA there that we're it's in well underway. We hope to have something on that by the end of this year. New resource, updated PEA. That'll give us some better metrics for the project. We've got the baseline work, which would feed into a mine permit. The next stage would be a pre-feasibility study. Really 2023 is going to be about exploration, trying to expand the resources so we can have a larger resource, so we get more robust project economics. That's really going to be the key. So, towards the end of next year, we'll really be starting to look, the timing for a PFS. And the other thing that we're going to look at is how do we finance the final feasibility study, and and the options there are strategics. We're seeing more interest from strategics. We don't really have a royalty. That's a way of financing, and offtake. So there's a number of ways that we can finance it without overly diluting it, we think. So it's a combination of the project development, more exploration, and getting the long lead time items, which a baseline environmental is the longest, and that's been started.
Okay. And back on the Tanco side of things, does the Tanco mine feed that goes into their concentrator have a fair bit of manganese in it? Do you know?
I don't know that. I don't. I think there's always some manganese in the thing, but I would hazard a guess they're not getting any economic value for that.
Okay.
Yeah.
And then at Donner Lake, with the resource size, given, as you say, just getting into some cash flow right away, if everything kind of goes ahead as planned with this agreement, would your plan be to aggressively explore that to increase a potential resource there?
I mean, yes, definitely. We the kind of the thing we're really looking for is something of similar grade that's 20-30 meters wide, that you're going to have a really robust kind of open pit type scenario, and a lot more tons. So we're not, we don't really know what the possibility, other than there seem to be a lot of spodumene dikes that we've seen to date. That's really what we're looking for. I think what the initial resource that we might establish will, let's say it's 5 million tons as a number. Let's say the historical resource was 3.8 million tons. So we think that's roughly approximate to, say, 300 to 400 meters depth or whatever. But that's not going to be enough to put in your own concentrator, but it would be enough for toll milling. But at the same time, we're looking for 20 million tons that we can mine. So that's why I talk about the optionality. Is that a smaller resource would be meaningful, particularly if you get into a toll milling agreement. And it's a valuable rock, and it would be valuable to somebody like Tanco, which is why they're doing, which was why they're talking to us and discussion. But it doesn't preclude us trying to say, let's try to find a 20 million ton deposit so we can build our own concentrator. So again, it's a good option for us. And we don't know what we're going to find, but we're optimistic. Seems to be a really good belt. The Tanco is a world-class pegmatite. It's a big pegmatite, and maybe there's a big one on the north arm where we are as well.
Okay, great. So we have a question here on the corporate side. I know you've announced in the past the spinning out the lithium business. Maybe this is pertaining to that, and you can just update this viewer on this. But wondering, kind of going forward, I'll just read it here. Are you planning to move forward as a nickel lithium company, or considering spinning out one or the other? So.
We're definitely considering it. The question is, when and how. There's a few things that we have in the works that we think would enhance our portfolios and make a separation of the two commodities more attractive. So we'd like to see those things be completed. A little bit complicated by our the other considerations are if we were to list on the ASX, do you do that before or after a split? Where are you in terms of your project development? There's a number of considerations, but we think that there is going to be some benefit of simplifying both the the focus on whether it's lithium or nickel. Yeah, but even having said that, there's some advantage to having multi-commodity exposure. So I think it's one of those things we'll know it when we see it, and it's something that's under active consideration, but we haven't made it a determination yet. And right now, it's probably not a great time to do it when the overall market is terrible, and there's not that much going on in the financing sector right now. So we'd rather do it when the market's a little more robust, so we'll play it by ear and see what happens. But we think it's doable for sure, and it's just a question of when.
Okay, perfect. So I think we've gotten through all the questions here. So maybe I'll just let you have a final word if you've got any final thoughts for investors.
Yeah, well, I guess we've spent a lot of time and effort over the years, working on these projects, and we're very optimistic going forward what these projects hold, and the possibilities ahead for Grid. So these are real projects, and we've got a great team, and we think that the time in the cycle is right, and we think this is a good time to look at the trends for the next number of years, where we are in our project cycle, the activities ahead, and we think it's going to be a good couple of years or more for Grid Metals going forward.
Perfect. So I'd like to thank Robin from Grid Metals for taking the time to host the webinar today with Red Cloud Securities, and thank you to everybody on the line for tuning in with us.